The Monetary Authority of Singapore has proposed new rules for issuing credit cards and granting credit. This is in a bid to reduce the risk of borrowers taking on more than they can afford.
As the consumer credit market expands, so does the amount of rollover, or the amount credit card holders don't pay on their monthly bill. Under the MAS's new proposal, borrowers whose payments are overdue by 60 days or more will be barred from adding to their credit card debt or tapping other facilities.
Do their own thing, nobody knows how much is outstanding. If the guy defaults, only one bank knows, but now the other banks will be informed, And then there are people, of course, who have been living on the edge. They have been actually rolling over the debt for years, hanging on by their fingernails. Very clear sign now that the MAS is discouraging the prolonged and intensive use of credit card facility.
Banks will have to disclose clearly the potential cost of debt accumulated as a result of rolling over credit. Those with interest-bearing balances equivalent to 2 months of their income or more for more than 6 straight months will also be unable to charge more.
No thanks, no bye. Cold calls from telemarketers offering credit limit increase may hopefully be a thing of the past. One of the proposed change is to disallow financial institutions from making unsolicited offers. This means that the credit card holder will be the one asking for a credit limit increase and hopefully one less cold call. Hello?
Analysts say the changes may increase administrative costs for banks, forcing them to re-strategize.
If you look into DBS, they have about 20 credit cards. OCBC has about 20 credit cards. Now they have to rethink, do we need this many cards? Or do we streamline and bring it down to a few cards so that will be easy to manage?
Local banks say feedback will be given on the proposed rules, which analysts say have come about as bad credit card debt has grown in tandem with Singapore's slowing economy. Figures from the Monetary Authority of Singapore showed that bad debt from credit card has reached record highs in 2012.
Another proposal by MAS is to allow those aged 55 and above to apply for credit cards, even if they don't meet the minimum income requirement of $15,000 a year.
Retirees could soon have more license to spend. That's if a proposal by the Monetary Authority of Singapore, or MAS, goes through. The regulator wants to give those who are aged above 55 and financially secure greater flexibility to qualify for a credit card. Currently, they must have an annual income of at least $15,000 to do so. But under the proposed changes, they will also qualify if they have net personal assets exceeding $750,000 or a guarantor with an annual income of at least $30,000. Many older Singaporeans welcome the possibility of the rules being relaxed.
Nowadays, to go out with cash in the pocket is quite troublesome. So credit card is a more flexible way of moving around cashless. So I think it's a good idea.
Some of the things that we really need credit cards, like to some purchases, we need some credit cards, or sometimes online purchases.
But others were cautious that this could lead to overspending.
It's not a good idea, especially for those who spend a lot of money and never consider whatever happened in the bank. I don't think so. Credit card is important to me, because for old people like us, with friends, we go overseas also, we normally bring along cash. We don't use credit card.
I don't think it's necessary to have a credit card, because Nets is so convenient. You use Nets.
Industry players say most retirees are prudent with their spending, so they may not be the ones the banks need to worry about.
Retirees are actually a good credit risk. Most of the people that are in trouble, the average age is about 40. Retirees hardly see any retirees unless they get into trouble with maybe gambling, perhaps, or it's carried forward from their past.
The public can give their feedback to the proposals by 21st January 2013.